Alright guys, let's have a talk about the Infinity AT now. So where we execute our trades, the platform we do, and take you through a few things, a few trades that we do and how we actually place the orders. But before we go to place any orders, first thing, couple of things we need to do. Obviously when we're looking to trade, we need to know how many contracts we're going to trade. So up here on your quantity, have one contract, two contracts, three, five, whatever it may be. Okay, so you need to have that set. So for this example, I'm going to just put it on two. I've just got a simulated dome up here just to show you how all these trades work. A couple other things you need to do is also have your profit target set. Okay, so a normal trade that we take has got an 8 tick profit target and also the stop loss. So the stop loss most of the time has a 6 tick stop loss. Also, it's very important when you first open this trading platform up that you've got the auto checked here and ticked, and also the quick click checked here as well. Okay, if you haven't and you place a trade, what you'll find is your stop losses and your profit targets won't come up. Okay, if that happens to you, you need to click this flatten button and get straight out of the trade. So the flatten button will exit you straight out of any trade that you're in. Okay, even if you've got the auto checked and the quick click checked, now and again the trading dome, your stop losses and your profit targets will come up. Okay, there's two things you can do if that happens. The first thing you can do is straight away click send bracket order. Okay, if that doesn't fix the problem and put your stop losses and your profit targets in straight away, flatten out of the trade. Okay, make sure you get out of the trade and then set it. You can shut your dome down, restart it, and the problem should go away. Okay, so we need all that checked before we're looking at buying and selling. So in the morning you should be diligent and make sure you got your quantity in, make sure the quick clicks clicked in the auto, and you got your stop and profit targets in there. Okay, so moving on to the trading dome, what we've got here is the yellow line, which is the current market price. Okay, that's always telling us the current market price. On the left hand side where all the numbers are, the 59.60, the 463 on the blue side is the buy side. So if we're expecting the market to go up, we're always clicking on the blue side. Okay, whether it's a PowerPoint trade or a power fade trade, we'd still be clicking on the blue side. So any buy trade we're looking for, we click on the blue side. On the red side is where we sell into the market. Okay, so all the contracts that you can see there, the 395, 317 and so on, they're the amount of contracts that are sitting on what's called the limit, looking to sell. The actual contracts that move this market are the ones you don't see. Okay, they actually sell or buy at the market and you don't see those contracts go through. Okay, so all the contracts that you can see on the buy side and the sell side can be deceiving. If you look at that and think, oh, there's more buyers, so the market's more likely to go up, think again, because all the sellers are selling at the market and most of the time they'll push it down. So if there's more contracts actually on the buy side, more likely the market's going down. And if there's more contracts on the sell side, normally the market's more likely going up. Okay, and there's a lot of games that are put on the trading room. Sometimes you'll see thousands of contracts at different levels. Okay, that's the big players playing some tricks on some smaller traders. So don't be fooled by bigger contracts on the dome. That's for sure. Okay, so let's look at when we go to take a trade, buying on a limit. Okay, so if we're buying on a limit, normally it'd be a PowerPoint trade. So for this example, let's say 24.50. I'm going to be buying, so I'm going to be clicking on the blue side. I've just got to get rid of this thing here for a second. So we'll be clicking on the blue side, and there we got filled. Okay, the way I've got my dome set up, and you can set it up exactly the same, go through the video on the members website, and it'll show you how to do all this stuff. When I enter a trade, my price that I entered the trade in is always highlighted in brown, so I know my entry point. So once we've entered this trade, two things have happened. Automatically, I've got a stop loss come up, which is the red, because I'm expecting this market to go up. Okay, also I've got my profit target up here in green. So every time we go into trade, we know what profit we're looking for and our stop losses we're looking for. Now these can be easily moved around. For example, if I was going to go for more profit on this trade and I said, okay, let's go for 27.50. All I do is move my mouse up to 27.50 and click on it, and automatically my profit target moves up there, okay, for me. Also with my stop loss right now it's at 1023. Let's say I said, oh, I'm going to move my stop loss up to protect the trade a little bit. Move it to 1023.50. All I need to do is put my mouse on the 1023.50 and click it, and automatically it moves for me. So this actual trading dome is very, very easy to use. Okay, so this is a normal power trade on the buy side. So what I'm going to do, I'm just going to flatten out of this trade. So just click flatten and automatically get straight out of the trade. So let's say if I was looking to go on the sell side and we're going to go on a limit order, and I said, oh, I think this market's going to go down, and we're waiting on a PowerPoint trade, for example, I would click on, and make sure too, guys, if you ever click flatten, you need to put your quantity back in. It always trips me up. But I hardly ever click the flatten button. So if I wanted to go short here at 24.50 and I was place an order there on the sell side, so what you'll notice now, as soon as I get filled into this trade, there'll be a stop loss come up, but it'll be above my price, and my profit target will be down here. So we just need this market to be accommodating here. And fill us into the trade. It looks like these markets were going up, so we should get into this trade here in a sec. So this can be one of the most frustrating things in real market time too. Sometimes we get hit on our price and we don't get filled into the trade, and all of a sudden it goes all the way to where we expected it to go, which can be annoying at times, but it's something that just happens. Alright, so now we're filled into the trade on the short side. So you'll notice the green is down here because green is good, green is profit, and our stop loss comes up. And every time we click above the price, so right now the yellow line's the current price, if we click above that price, it'll move our stop loss around. Okay, wherever we click, that's where it'll move our stop loss to. Okay, if we click below the yellow line, it'll move our profit target to wherever we click. Okay, and that's how we simply buy and sell out of the market. If we wanted to get out of this manually, okay, all I'd actually need to do is click on the 24.50 and I can get out of it straight away. Okay, and what happens then is the market will cancel my existing profit and stop loss targets, so the market automatically gets rid of them. Okay, so that's when taking a normal trade on what's called a limit, so if we're buying or selling at a PowerPoint area. Now let's say if we're going to take a power fade. Okay, so we're expecting the market to go up or down. So normally we pre-place these trades, normally at least 20 seconds most of the time before the market gets to them. If we're expecting, in this case, we'll expect the market to go on the downside. Okay, so what I could say to you guys, alright, we're going to fade this PowerPoint. If it comes down to 23.25, I'll just click the 23.25 on the sell side. If it hits that price, automatically I'll be filled on the short side into the trade. Okay, just bang like then, and automatically my stop loss comes up and my profit target comes up. So that's what's called putting a sell stop into the market, because what actually happens is the price was above my entry point, okay, and I want it to come down and hit a certain price before I go into the trade. So that's how that particular trade works there. So the sell stop, you'll look when you put your mouse onto the sell side, you'll see the S stop comes up. So we're expecting the market to come down, and we're going to fade a lower power point, so the market to push down. That's what we would do. Alrighty, so I'll just get out of this trade here. Alright, so now the opposite to the sell power fade is the buy power fade. So if we're buying and we think the market's going to go up, whether it's on a limit order or on a power fade trade, on what's called a buy stop, we click on the blue side. So let's say if I said, alright, the market's coming up here, if it hits 1024, let's make it 1024.25, I want to go long. If that happens, if it goes to 1024.25, I want to go long. So I just clicked on the blue side at that price, waiting for the market to hit it. This market's going to be nice here and hit it for me. So look, there we go, and just hit it. and all of a sudden you'll see I'm on the buy side, so the profit target will come up, and also the stop loss will come in there. I'll get a lot of questions about adding contracts to trades and how you do that as well. So what I'm going to do is just move my profit target up here. So if I'm in this trade, for example, with 2 contracts, when you're adding to trades, always halve it. Okay, halve what extra contracts you're going to put into the trade. So let's say here I've got 2 contracts in. I want to go another contract in because I think this market's going to keep going up or whatever. So I can right now, there's 2 ways I can do it. I can try to buy on a limit. So I can try to get another contract in at 1,024.50. 24.25. Sorry, they've pushed up above me here. I'll just cancel that for a sec. So I'll say let's buy some more contracts at 1,024.75. 1,024.50, let's say, argument's sake. So I just click on it. Automatically, I've added another contract into the trade. Automatically, the brown, which is my average price, will adapt to whatever my average price is. Okay, so I'll know what my break entry point is on the trade. And automatically what you'll notice is that my stop loss has got an extra contract added to it, and also my profit target has got another contract added to it as well. Now, because I added that other contract in, I could say I only wanted to go for a point on that contract. So what I can actually do, let's say I put at 1,025.25, I wanted to get that one contract out. I just place a sell order at that price, and if the market comes up and hits it, it'll take that contract out, and automatically my 3 contracts up here at the profit target will adapt to 2 contracts, and my stop loss as well, because that's all I've got left into the trade. Okay, so you can add contracts easily like that. And also, this is how you get, if you've got, just say you're trading multiple contracts, whether it's 2, 5, 10, whatever, and you wanted to get some of your contracts out, and you're on the long side, doesn't have to be all of them, could be some of them. Okay, all you need to do is go like on a sell limit, and just execute the trade, and then you can get the contracts out there, no problem. So it's actually, adding to trades is very, very easy. So if you're on the buy side, you're just buying at the whatever price you want to add into. Okay, obviously there's a bit of an art to doing all that, but for this I'm just showing you how to place the orders. And if it just shoots up here, the market's not moving around greatly here, but it looks like it's coming up here. And you can get out of these trades at any time as well. Okay, one of the keys to adding contracts into trade is, 1, don't go as many as you first went into the trade originally. So here we go, looks like we're going to get taken out of contract here. And all of a sudden it brings up your break-even point again. Okay, so as the trade goes up, even if you wanted to do a buy stop, you can do another buy stop. Say, one of the things that I regularly do, when it's close to my stop, a few ticks away, I might add some more contracts in for a bit of fun. So I do that before time. I'll put a buy stop there, and as soon as it hits, it'll take my contract, and normally I'll be going for 3 or 4 ticks above that, and pushes through. Okay, but the key to this is, if you're trading contracts, multiple contracts, you want to get them in early. And there's a whole art form around that, but this exercise is just to show you how to actually add in extra contracts into a trade. And you can obviously cancel it at any time, all the different orders there. So that's basically it. Doesn't matter if you're on the long side or the short side, you can always add contracts into trade. It's not something I would recommend, especially when you're first starting. Okay, because when you're first starting, it's very hard to predict when and where to actually add contracts into trade. But traditionally, normally when I'm going for a 4 or a 6 point move, sometimes they're the times that you can add some contracts in, even pinching points between a trade. So this trade here, for example, we're in it. I could say, I want to buy another contract here, and just go for a quick point off it. So you can do a trade within a trade. So there's more ways than one to skin a cat, for example. Hopefully there's not too many cat lovers out there, right? But the reality is, it's all actually very, very simple to do. Just practice it. Make sure you practice it on simulation. If you're looking at adding contracts into trades and things like that, make sure you do a hell of a lot of practice before you do it for real. Okay, so you know exactly what you're doing, but it's actually very, very easy. So if you're on the buy side, just keep adding them onto the buy side, and so on and so on. So you can get out of trades anytime you want as well. Even if I wanted to get that one contract out now, I'd normally cancel the order and just take one out there, and all of a sudden, you know, it's just very, very easy to do, and you can move your stop losses and profit targets around. But the key to doing all this sort of stuff is practice on your domes before you do it on real money is the key. You know, even over a day, have a crazy day and take every single trade out there. Like for every PowerPoint, take trades. You know, every trade, look to power fade trades, and really just practice on the dome. Okay, I don't say to do that for a long period of time. Just do it for 1 day or 2 days, just so you really know how to use the trading dome. Okay, and then once you're trading, you need to be really smart about it and take the trades that you're meant to in your trading plan. Because if you mess around with on the trading dome while you're practicing this, when you go to real money, you'll do the same thing. So you don't want to do it too much, but just to learn how to use the trading dome, you can have, you know, one crazy day, take all the trades, you know, forget about the P&L, it's irrelevant. What it's about is learning how to use the trading dome and to maximize your profits, that's for sure. So right now I'll just get out of this trade, just click there. So you can manually get out of the trades. You just got to remember how many contracts you got in the trade, and whatever you want to get out, you just reduce your quantity or up your quantity, or you know, whichever way you want to go about it. But it's actually pretty simple. Just practice it, and it becomes very, very easy to do, just like second nature. Alrighty, cheers guys.